At Affordicare Insurance, we're going to be talking about our flagship product, Champion Health, today. And the beauty of this product is that it allows the employer to offer access to coverage to every W-2 employee that they have. It allows the employees themselves to actually receive a raise by participating, and the employer actually increase their profits as a result. So the beauty of this and where this all stemmed from was the ability to try to increase the employees' overall well-being by their overall health. And so just like a safe driver discount, let's say with car insurance, will kind of provide methods and recommendations to help those employees, or in these cases, the drivers, drive safer. This does the very same thing with their health insurance. And so what we're trying to do is prevent major claims from ever happening and small claims to be absorbed over to this plan. The benefit of this is that there is a incredibly cool face scanning technology that we have, which is a patented FDA registered technology that allows the employee to use the front facing camera of their phone. And since your skin is translucent, it can actually pick up with incredible accuracy everything, as you can see here, from your heart rate, your breathing, your blood pressure, the chance of you having a stroke later on in life or a heart attack, your overall stress levels, the body mass index, your hip to weight ratio, and then even the age of your skin. The beauty of this is that this overall life score that's created, we have so much data through millions and millions of different touch points across years and years that we have a direct ability to see that the higher the score, the lower the actual spend on their health insurance for that employee over that year and over that lifetime. So this allows us to actually track and see how a company is actually improving. And it's done so well that we actually have some of the largest insurance companies in the world that have actually recognized this and the method and the ability to track this. And actually, as a result, plans that have Champion Health embedded, we actually can get a discount with a major medical carrier as a result of how much this number correlates in a proactive approach to make sure that we can catch again things before they become issues, and the ability to immediately offload a lot of claims. So speaking about claims, the every employee that's a W-2 within that company will receive everything you're seeing here. Now, all these benefits are covered by the savings in the plan. So the employee themselves has no cost that they will have by being enrolled. They'll actually have an increase in pay while having access here to themselves and then their family as well. So for the preventative visits, this is what's considered minimum essential coverage, or a MEC. This satisfies something called the 1095B that shows that the employer has provided access where that Patent Protection ACA Act requires them to provide that, and actually not only saves them a penalty if they had more than 50 employees, but of course unlimited access to the 100% of the coverages provided by the MEC. The second thing is that the primary care doctor, the urgent care visits, these are in-person visits. They can submit the card that you're seeing here and actually use this as a zero cost with unlimited number of visits or copays for them to experience that. With the prescriptions, there's a large range of a formulary, anywhere from $0 to $1 at the most. This is including the entire family, regardless of how many children that they have. And the beauty of this is that every single time that they fill a prescription, again, it's anywhere from $0 to $1 for the whole family, unlimited number of uses. So you can see here that immediately, even day one, we're taking a massive amount of claims that should have hit their major medical if they have a plan in place, and are now redirecting it to the Champ plan. So not only are we providing, again, access to every single employee, whether they have coverage or not. So if let's say employee has no coverage right now, every day, the moment that they're hired, now they can have access to something that they didn't before. It doesn't cost the employer money to access it. And then of course it's helping decrease that renewal on their major medical should that ever, they have an existing plan. The remaining two benefits are potentially the most important, because what's happening here is now there is a direct primary care doctor, similar to kind of companies that you might have heard from before that maybe have an actual company doctor on site. This is the same ability, but where they can call that doctor at any time for any reason for their whole family. And the same thing with mental health. So again, for physical issues, they can call somebody. It costs the company nothing. It costs the employee nothing. And for the mental health, the same thing. So just as an example, let's say maybe they have a child and it's getting bullied at school. The ability for the parents to get somebody who's a specialist with child psychology to walk through any issues that they have one-on-one and be able to call them again at no cost to them, no cost to the child, no cost to the parents, and no cost to the company is huge. You can also imagine with marriage counseling, this is a huge benefit that the company themselves can now offer those employees as an ability to call them whenever they need to. And of course, there's so many different things that we all deal with on a daily basis. And just realizing that you've empowered the employees now within this company to have access whenever they need it and potentially cut down on a lot of things and have way, way, way more productive employees as a result. So basically, to get these benefits, we're not asking for money, and the employee effectively is voluntarily able to do this if they want to or not. But should they want to move forward, which again would be a very smart decision, they would be able to create a profile. They'll do certain items or actions that we're going to send them prompts via like a text message, a phone call, email. And these are things that would be proactive, preventative based things. So examples would be like stopping smoking, sleeping better, losing weight. We talked about the biometric screening where you can basically kind of see where you're at and how you've come, over month to month, year to year. So the purpose of these is there's a actual company provider, a doctor that is subscribing or giving these actions for those employees to do. The purpose of this is that not only one, do we catch things before they become issues, but two, there is an actual medical event or substantiated CPT code or ICD-10 that exists by this action being created. So for example, the employee does a health risk assessment, a risk guide for stress, and a new patient evaluation. And this again is all administered by our TPA and our provider. So there's a direct amount by the AMA that calculates these amounts of the eligible expense of what this actual costs and what the billable amount is. So again, we do not create these numbers. This is all done by the AMA, but as a result, you can see that this employee incurred a little over $1,400 of eligible expenses this month. So on the following screen, we're going to talk about what the employee here is actually seeing before and after doing this. So we'll call this month one, or we'll call this like the open enrollment on the left-hand side here. And this is just an example of an employee who makes $5,000 a month. They pay about $1,000 in taxes during that same month. And during this, again, this open enrollment, they would have already completed these actions you're seeing here. And there would be an insurance claimant or medical payment due to that employee as a result of this plan. So in the second month, you can see the gross pay stays exactly the same, except now there is a new deduction on top of if they had health insurance, an HSA, a 401k, or any other benefits. And this is a $1,200 monthly pre-tax deduction that is the same with every employee, regardless of where they live, how much they make, or any other deductions they have. As a result, just like any other benefit you'd offer, this has a reduction of their overall taxes as the employee. And just like how, again, the benefit as adding a 401k, you're reducing the amount of gross pay, adjusted gross income, and as a result, saving taxes. Same thing here, just like any other Section 125 plan. What makes this extremely unique and beneficial to all the parties involved is that now, because of the insurance claim payment that they already did the month before that has been waiting to pay them, per the plan details and plan documents, we will pay fixed indemnity amount of $1,010, regardless of their actual medical expenses they had during those events, for $1,010. So to do the math on this, they saved $325 roughly in taxes. The difference between the deduction and the insurance claim payment was $190. And this $190 is going to cover the benefits we just talked about here and here. And then the difference of that is, of course, $135 as a net increase in pay. So as an employer, you've given your employees a raise, you've given them and their family unlimited $0 copays, and you've also then yourselves saved yourself additional FICA tax savings on top of any other deduction of the 1,200 you're seeing here at 7.65% equals a savings of $91.80 per employee per month in FICA that you would have normally and would have paid. In this case, there's some expenses that the employee is not able to pay, being this is an ERISA 125 plan. So these administration fees are things like the TPA, the different PBMs and networks, the providers, and those expenses basically is a total $44. And so the net result of the employer is a $47.80 per employee per month forever. Or to look at this another way, that there is no replacement, there's no interference with any existing plan. This is simply just being added to it. And if we take this $47.80 and multiply that by 12 months in a year, it gives the employer a guaranteed savings of $573.60 and a variable savings to the employees of well over about $100 a month on average. We see some that are in the $200 to $300 range, but about $100 a month per employee is pretty average. And so just to kind of walk through the money flow, a little bit more detail on this. So out of the $91 the employer saves first, they pay $44 of that to basically have the plan run the way that it does. The remaining $1,200 by the employees, again, pre-taxed, is $70 of this comes out as a claims benefit pool. The remaining $1,130 is this fixed indemnity claim payment. Now from this, there is a withheld amount of $120, and this is paid with post-tax dollars. So just how you pay your life insurance and probably your car insurance with post-tax dollars, the benefit of that is when you have a car accident or when you get paid out of life insurance, there's no 1099 that's being sent to you or the employee in this case. It's being a non-tax amount being distributed because this plan documents is stemming from the $120 of post-tax. So again, the $1,200 paid in results in a $1,010 non-taxable amount being distributed as a result of being substantiated by the medical and CPT codes that allow this to be an insurance claim event and not just a reimbursement or a wellness thing that of course would be taxable. So to give it kind of some full story of, I guess, how powerful this really is, just a 150 person group, and these are all numbers that are exactly the same regardless of how many employees. It just varies on the number of how many people are participating. So the employer, if you had 150 employees enrolled, the employer would save $86,000 every year in FICA taxes as a guaranteed fixed amount, because the $1,200 that we're taking as a deduction is a fixed amount as well. The employees are getting a raise of almost $250,000 a year. It doesn't come from the employer. And then, of course, the offloading of claims. So again, we average about $720 per family per year. This is every COVID test, mental health visit, mammogram, colonoscopy, urgent care, that of course Champ pays and pays at 100%. So the net result is all these claims not hitting the major medical, and especially for self-funded plans, that would be at least or an average of $100,000 a year that either the company would get back or have less premiums paid in. So we're talking about a $400,000 increase economic benefit between the employer, the employee, and the ongoing things. There is one additional savings which only applies in certain states, but it's with their workers' comp for their as a PNC product. And the benefit of this is that when you reduce the employee's adjusted gross income, the workers' comp amount is subsequently a reflection of that premium. So for example, somebody who pays $10 for every $100 that they make, right, which is effectively a 10% increase or a 10% premium for their workers' comp off of their actual gross wage, what the reduction in the Champ gross income does is it lowers that. So again, somebody who's making 30 grand a year and this $1,200 deduction or $14,400 over a year is effectively nearly reduced that workers' comp premium by almost half as a result of adding this in here. Now, this is not available in all states how it's calculated, but it is an incredible benefit when you look at it to have, again, the full circle of everything we're doing here. For larger companies, again, we're in the process on onboarding groups that are in the hundreds of thousands of employees, but the numbers again are the same. But of course, of $43 million as a guaranteed savings to the employer, $100 million raise to the employees, and then all the different benefits that, of course, are helping the workforce be healthier. That's really hard to put a number on, but then, of course, the overall savings with their health plan is massive. So basically, to get started in this, all we do is we get a basic census that has the employee's name, their income, and the state that they live in. That allows us to do a personalized proposal. Once we see it, the group will go through it, ask whatever questions they have, walk through the whole process, and attend several different pre-enrollment calls. From there, once we know who's on it, we send out the link to the employees. They enroll in the plan, they set up the profile. Whenever whoever is opted in or opted out, we have that at the end of the month. We send that over to payroll. We work with almost every single payroll company in the world, and we can set it up all for them where you're doing a fixed ledger line items, and it's a very, very simple process from there. At that point, the following month, like we talked about on that paycheck, the savings go live and those benefits are realized. And so at the end of the day, we get a basic census, we sign the plan documents, and then from there, we will take care of every employee interaction, all the enrollment materials, educating the employees, making sure that if you have new employees being hired or other employees being terminated, we coordinate all that, set it all up with payroll, and the entire process takes about 2 months basically from beginning to the end of the entire thing where the employees are actually being able to use it and seeing that increase in pay. So to give you one other kind of just a real powerful example here, the way that we've seen other groups kind of apply this is a 50-person group. There's about 11% or about a $60,000 increase in pay, or sorry, increase in premiums. And the difference of this is that there's other plans like we talked about earlier that are aware and understand how much of a net result the CHAMP plan makes overall, not only just to the health insurance, but the overall well-being of the group. So to kind of just show an example here, same deductibles, same co-pays, no change in terms of the benefits or the ability of care or anything else. But however, you can see here with this CHAMP plan, it's offloading all these small and medium claims, making again less risk for the plan, and again that preventative, that proactive approach. So this resulted in $100,000 savings in premiums based on how it was underwritten and basically giving credit where credit's due, how powerful of an impact this makes. Then on top of that, there's an additional almost $58,000 that the employer is making as a net increase in less FICA taxes. And then the employees here, the second one, is another $66,000 as a raise the employees got in pay that they could use towards funding these benefits. And then at the end of this year, out of this $531,000 being partially self-funded, the group got back a $274,000 check as a result of all those claims that CHAMP was able to offload and put away. So the net result of this is a $500,000 savings, or an 80% discount, so to speak, of what the initial renewal would have been, to where we came in not necessarily changing the benefits, but adding CHAMP and how powerful this is. So I appreciate you guys taking the time to watch this. If you have any questions, feel free to reach out to us. And again, appreciate you guys so much, and have a great rest of your day.